Good morning, hello and welcome to Money Control's live stream. You're watching a fresh edition of Opening Bell with me, Lovisha Darad. Well, we are back after a Christmas holiday and hope you had a fun and a relaxing break. Now, let's get up for today's session. Well, today the GIFT Nifty is pointing out to a positive start after quite a volatile last session. Even the pre-open rates at this point of time is pointing out to a positive start in the Indian markets. Sensex, if we see, it is quite flat in the green as well, and Nifty also flat in the green, but we'll see if there is any development and how the market opens in today's session as well. It's a Boxing Day and it is the expiry day, so volatility is likely to remain on the higher side as well. If you look at the global markets, of course, they are largely okay, but we have fewer markets open, of course, on account of holidays. If you look at Hong Kong and Australian markets, they are shut. But in the Asia Pacific, one key trigger, that is your Japan's Nikkei 225, that has showed a good start as the government is expected to table a record budget. So yes, positive sign coming in from the Japanese markets. Even US markets on the day of Christmas Eve, that closed positively. So yes, quite a positive handover coming in, but yes, volumes are expected to be thin for a couple more days because we are moving to a new year, starting fresh with 2025. So yes, we will be seeing a little less action and a little less quiet action in the coming next days as well. But don't go anywhere. We will be taking your stock related queries soon. So don't forget to post them on our live feed, and we'll try to address them before 9:30 a.m. with our market experts. For now, let's take a quick look at the top headlines this hour. All major averages of Wall Street close higher on Christmas Eve. The S&P 500 also turns positive for the month of December. Stocks in the Asia Pacific also trade largely higher. Markets in Hong Kong and Australia also remain shut on Boxing Day holiday. The GIFT Nifty is also indicating a positive start for our own markets. Crude prices rise about 1% on Tuesday, taking Brent at $73 per barrel. Gold prices remain range-bound, trading at $2,600 an ounce. The rupee continues to weaken for the sixth straight session, falls to a record low of 85.20 against the US dollar, pressured by a higher greenback and rising crude prices. All right, since last Friday, we are seeing that the Nifty has been trading quite sideways. We're seeing that they're trading in the range of 23,500 to about 24,000. So any break on either side, we can decide, the next market direction. So we will watch out whether or not if there is an upward lift and the upward movement above the 24,000 mark in today's trading session as well. But in the last session, Nifty did end lower, but it still managed to stay above its 200 DMA levels, which is 23,700. So it defended those levels, and that is one of the positive signs that came for the markets as well. Now, the stocks that supported the markets in the last session were the auto and FMCG pack, but metals that dampened the market sentiment, and metals were the reason why that led to the weakness in the markets as well in the last session. Even Bank Nifty, for that matter, that ended on a flat note and flat in the red as well. Now, for today's trade, we have the expiry day, and of course, volatility is expected to remain high. But let's take a look at some of the cues that will set the tone. First up on your screen is the option cues data. We are seeing that the Nifty put call ratio rose to 0.94 levels from 0.84 levels in the previous session. So we can see that it has been rising since the past two sessions. That means that it is good news for the bulls as well. Second, we can see that the FNO ban list, that had no new addition. Only one stock which is retained, that is your RBL Bank. Now, the stocks that have exited, that include the list of Bandhan Bank, Granules India, Hindustan Copper and Manappuram Finance. And finally, the fund flows data on your screen, that is your FIIs. They have extended their sell-off for the 7th straight day now. They sold about 2,400 crore rupees worth of Indian equities in the cash markets. However, DIIs that have remained a supportive hand, and they have lent and they have bought around 2,800 crore rupees worth of Indian equities. Now, just a couple of minutes before we hit the opening bell, let's take a look at how the markets are doing at this point of time in the pre-open. Well, the Sensex is up about 78,560. So it is 87 points, about like 0.1% at this point of time. Pre-open rates are pointing out to a good start for the Indian markets, but this is the December series, and of course after 2 months of lull, that is your October and as well as the November series, they had pointed out to a muted close. So December series could be a bit of an overhang as well. Now, just a couple of minutes before we hit the opening bell, let's quickly get on board with our technical expert of the show. We have Chandan Taparia of Motilal Oswal. Chandan, good morning. So good to have you. Okay, just a couple of minutes. We will be waiting for Chandan at this point of time. But let's look at some of the brokerages that came in today morning. Well, Motilal Oswal came out with its report on PNB Housing Finance. It has given out a buy call on the stock, and it has given a target price of about 1,160 rupees per share. Motilal Oswal says that the strategic shift in the product mix will be leading gains for the stock as well, and the mix improvement is expected to aid the margin expansion. And recoveries are also expected to keep the credit costs benign at this point of time, and the company is positioned to deliver about 18% loan CAGR over FY24 to 27. So yes, a positive comment coming in for PNB Housing Finance. Even we had Motilal Oswal coming out with its report on auto industries. Well, of course, autos, we've been seeing that it's quite lagging in this past month as well. Nifty Auto Index in the previous session also, it ended lower. It was, ended lower in the trade as well. Previous session, it did eke out and show a bit of positive sign, but for the month, it has not been doing well. Now, Motilal Oswal says that the November month was expected to be a weak month due to the high base of last year. PV industry, however, they have posted a 4% year-on-year growth in the number of dispatches in the month of November. Honda Motor has outperformed in both the scooter, ICE and motorcycle segments. However, the major PV outperformers stand out to be M&M and Toyota. Do note that M&M has quite been an outperformer this year, and we'll see whether or not the sustenance of this move of M&M gets carried on to the next year as well. At this point of time, Motilal Oswal says that their top picks continue to be Maruti, M&M and Hyundai Motors at this point of time. So yes, good brokerage calls coming in this morning, but let's quickly get on board with our technical expert of the show, Chandan Taparia of Motilal Oswal. Chandan, good morning. So good to have you. Hi Chandan, am I audible at this point of time?
मुझे प्रोग्राम ऑडियो नहीं आ रहा है.
I think there's a little bit of technical snag at this point of time, but we will try to reconnect with him soon. But let's take a look at another brokerage report that came out this morning, that was on oil and gas industry. Well, oil and gas industry, they're saying Morgan Stanley has come out with its report, and it's saying that the India's natural gas demand has rose about 3% year on year last month and about 7% YTD in FY25. They believe that there was about 10% consumption increase in the industrial and city gas sectors. So yes, good demand coming in for the oil and gas industry. They believe that the LNG demand has remained steady despite the higher prices, and fertilizer demand is also steady, and the LNG market share has averaged about 51%. So yes, good commentary coming in for the oil and gas industry as well. So yes, quite a bit of a brokerage calls that is coming in for the morning. If we look at what the top stocks at this point of time are, if we see Nalco India, that has signed a mining lease for Utkal D and Utkal E coal block. So they are planning to sign these mining leases for enhancing the coal production capacity to 4 MTPA. Even BPCL has come out with its stock call and has said that they have emerged as the lowest bidder for about 150 megawatt ISTS connected NTPC project. So yes, those are the top stocks that did come out this morning in the last session as well. But once again, let's try to reconnect with Chandan Taparia of Motilal Oswal. Chandan, am I audible at this point? Okay, there seems to be a bit of a technical snag, but just a couple of minutes before we hit to the opening bell. Let's take another stock in focus, that is your Cello World. Well, ICICI Securities has come out with its report in the morning and has given out a buy call on the stock, and it has shared a target price of about 960 rupees per share. They believe that the company has remained constructive and there are multiple growth tailwinds in FY26. They believe that the commencement of the glassware unit in the second quarter may start contributing to revenue as well as earnings. So yes, they also believe that the integration of Wimplast with itself will allow to unlock synergy benefits in the distribution, and they believe that the investment in brand building, digital spends and quick commerce may contribute materially to earnings in FY26. So yes, some growth spurts which is visible, and of course some demand recovery which is expected for the for Cello World. So yes, a good commentary coming from ICICI Securities as well. But of course, we saw, a couple of days back that defense stocks was also doing well. We had some good commentary coming in for defense stocks. They believe, like for example, Nuvama pointed out in its report that they are giving a good, amid this global uncertainty, India is trying to come out with its defense, and of course, capex spending is expected to increase next year. So once the capex spending picks up for the government, the defense stocks are expected to do well. So we'll see whether or not this holds well for the Indian markets as well, and of course for the defense stocks as well. But let's quickly take a look at what the opening rates at this point of time pointing out. Well, let's see. Okay, all right. So both the markets have opened quite strongly at this point of time. Sensex above that 23,750 mark, up about 0.2% at this point of time. Sensex also doing well, up about 0.2%, up about 200 points above that 78,650 mark at this point of time. So yes, both of them, Sensex and Nifty, doing well. If you look at some of the sectoral indices, majority of them have opened in the green, except your Nifty IT index, which is seeing a bit of a profit booking, down flat in the red. But hopefully that doesn't sustain during the next period of point of time. India Wix has spiked up 0.5% gain coming in for India Wix above that 13 odd levels. But however, Nifty Auto Index is doing well. Bank Nifty is doing well. Bank Nifty, which did not perform in the last session due to its expiry, monthly expiry, it is up about 0.8% at this point of time. If you look at Nifty Metal Index, that is also doing well, 0.1% gain coming in. So very quiet trade. However, PSU banks, 0.8%, Nifty Realty Index unchanged at this point of time. So yes, a quiet trade coming in for the Indian markets as at this point of time. If we look at the broader indices of the markets, small cap 0.1% gain, mid caps flat in the red. So we'll see, whether or not this volatility is also spiking up slowly and slowly. It's the expiry day. So we'll see whether or not this holds well for the markets. If you look at some of the top gainers on the Nifty, that include the likes of ICICI Bank, Axis Bank, SBI, Kotak Mahindra Bank. So banking pack is doing well, and it is outperforming in today's market. ICICI Bank giving out about 0.8% gain, Axis Bank also on the same front, SBI also 0.6% gain, Kotak Mahindra Bank also about 0.6% at this point of time. If we look at some of the top losers on the Nifty 50, they include the likes of TCS, down about 0.2%. So IT stocks are seeing a bit of a profit booking. Other than that, we can see Asian Paints, Tech Mahindra, HCL, Shriram Finance also not doing well at this point of time. But let's once again reconnect with our guest, Chandan Taparia of Motilal Oswal. Chandan, good morning. I hope I am audible right now. Chandan, let me begin by asking that, Nifty has been consolidating. It is, since last Friday, it is moving between the range of 23,500 to 24,000. So any breakout, what are the levels are you watching on this expiry day?
So Nifty has been moving in a narrow range from last two trading session. Technically, it has formed an inside bar or doji sort of candle, which indicates the tug of war is clearly visible between bulls and bears. Earlier, in last 6-7 days, the index has corrected by more than 1,300 points from 24,800 to 23,537 marks. So structure is as of now mixed. However, if it negates the lower top, lower bottom on the daily chart, then only recovery could be seen. Otherwise, it can retest to the recent lows. So for me, 23,850 is an important level. If market manages to surpass above the same, then only the stability and buying interest from the bulls will be back. Otherwise, it can drip down to retest the lower support of 23,500. So 23,500 to 23,850 is the broader range. Being the monthly expiry, some roller coaster ride could be there. But I'm closely watching these levels to get any decisive or conclusive trade in the market.
All right. Chandan, what about the Bank Nifty index? Because that has stayed above 51,200, and today also Bank Nifty is doing well. We are seeing quite an action in the banking pack. So can we expect a move towards 51,800 soon?
So Bank Nifty has been moving in a narrow range from last two trading session. The good part is it has been consolidating, but the concern is the follow-up is missing. It also formed an inside bar, which is a symmetrical triangle on the lower time frame, a shark pattern, which indicates that price momentum is getting narrow. In fact, the Bank Nifty moved in a range of 200 points for most part of the day on Tuesday being its monthly expiry. So that was quite interesting and the new. But as of now, I believe 51,000 could act as a key level. So 51,000 to 51,500 is broader range. If manages to move beyond 51,500, then only the short-term bottom could be placed for an upside move of 500 to 700 points. While hold below 51,000 can take it to 50,500. So here I'll closely watch 51,000 to 51,500 for a decisive range breakout or to commence the next leg of rally in the banking index.
Okay, all right. 51,500, that is the key level that we need to watch out. But Chandan, how are the defenses placed at this juncture? Do you believe that they will act as a safe plays in this volatile market?
Yeah, so we need to focus on the defensive name. Nifty Pharma has been consolidating in range, but some support-based buying was seen in last 3-4 weeks, and this is the one sector which can do well. We can talk about counter like Dr. Reddy or Lupin or stock like Ipca Labs where some buying interest could emerge. So talking about Dr. Reddy, a major trend is positive. The stock has been forming higher lows from last 5-6 trading sessions. Supports are intact at 1315. So with support of 1315, one can look for an upside target towards 1410. Apart from Dr. Reddy, we can look at the Lupin, positive price setup. However, it formed a dozy candle. But the good part is even after the market decline, the stock is holding, which is giving the strength to the counter. So with support of 21.25, we can look for an upside target towards 22.15 Lupin. So in safety and defense, I'll go with pharma and select a counter like Lupin and Dr. Reddy could be on radar. Apart from that, one can also look at the other pharma name, whether we talk about the granules or Syngene. All these stocks could be in buzz during the day.
Okay, all right. Let's let's take some of the viewer queries as well. Since we talked about pharma at this point of time, you mentioned about Dr. Reddy's and Lupin. We also have a viewer query by Naveen. He's asking the view on Biocon. We saw Biocon, ending with about 5% gains after the API facility was cleared by the US drug regulator in Bangalore. So how is the stock placed at this point of time, Chandan?
So Biocon has recently seen a profit booking decline from 380 to 330 levels, corrected by around 50 rupees in last 10 days. But the good part is it is now supporting well to its rising support trend line on the daily and the weekly. So with support of 335, we can see a bounce towards 360, 362 in Biocon.
Okay, 360 is the target that we are eyeing for Biocon. Okay, let's move to another viewer query. Naveen is also asking about the Tata Motors, whether or not we should hold or exit at this point of time. After July, Chandan, the stock has been spiraling downwards. Do you believe that there is no positive news on the horizon or any momentum to push the stock further?
So Tata Motor has been making lower top, lower bottom and corrected by around corrected well in last 5 months from 1175 to 717 marks. Short term and medium term trend is negative. However, on last trading session, it witnessed some recovery, but again, it would be tough to hold the recovery till the key level is not surpassed. So as of now, the immediate hurdle for the counter is going to be at 755. Till it remains below 755, we believe bounce could be sold for a downside target towards 17,700 zone. So structure is weak. Sell on bounce can be applied here as of now.
Sell on buy bounce strategy can be applied as of now.
Hello.
Okay, Chandan, let's move to another viewer query. That is your Satya. He's asking that what is the view on Tata Consumer versus ITC for adding for the next 1 year or so, and what is the expected target? Tata Consumer, if we see YTD charts, Chandan, it has declined 14%, but ITC, very minor gains, about 2% at this point of time. We also have the demerger, which is going to be effective on January 1st. What are you expecting from both of these stocks?
So to discuss about Tata Consumer, the stock has been making lower top, lower bottom on the weekly, monthly, and the daily chart, corrected from 1235 to 882 marks, and now trading at yearly low levels. So weakness is there, but need to look at the key support at 880 in Tata Consumer. Looking at the ITC, yeah, here we believe some bottom is being processed. 455 is the major support, and now the support is shifting higher to 465. So with support of 465, one can look for an upside target towards 495 in ITC. So ITC is comparatively better than other name, and somehow we are witnessing positive price action followed by multiple bottoms, surpassing its falling supply trend line and getting the bullish crossover on the mechanical indicator.
Okay, so ITC is better placed than Tata Consumer at this point. Let's take another viewer query. Debu K is asking the views on Ajanta Pharma. Ajanta Pharma, so far this year, quite an outperformer, Chandan. What can we expect? Can we expect that the new year also holds well for this counter?
So here the structure is weak. Weakness is visible in the counter, and we have noticed that every small bounce is being sold. However, the good part is supports are being visible at 2750. So 2750 needs to be taken care of. Below that, fresh selling could be there. So as of now, sell on bounce or below 2750, one can even go aggressive on the negative side.
Okay, go aggressive on the negative side. Let's take a stock in focus. That is your BPCL. That rose about 1% in today's trading session. Well, the company has emerged as the lowest bidder for 150 megawatt solar PV power project of NTPC, and they estimate that the capital outlay of the project is expected to be 756 crore rupees. Chandan, BPCL was the top gainer last session, but it has been an underperformer this year as well. Today, the stock is doing well, but what does the near term hold?
So BPCL has formed an inside bar on the monthly scale and remained very dull in between 282 to 308. Broader range is 280 to 320, which we have noticed in last couple of weeks. Earlier 320 used to act as a major support, and now that worked as a hurdle and stock drifted lower. So immediate hurdle is shifting to 308. So 280 to 308 is the probable range. Not getting the clear sense, but some sort of range bound bias is clearly visible in BPCL.
Okay, some range bound bias is visible. Let's take another stock in focus, that is your Bharat Forge. That is the company plans to infuse about 39 million euros in arm Bharat Forge Global Holding. Chandan, the stock has been spiraling downwards since July if you look at Bharat Forge. So do you expect that this news will bring some optimism for the company?
So yes, structure is weak. It has been falling down from last 5 months, corrected from 1770 to 1270 marks, correction of more than 500 points from higher levels. However, the good part is we witnessed some recovery in last 2 days, but concern is it has been moving in a falling supply trend line. So I'm not in hurry. Let it surpass 1370, or otherwise let it find the stability near 1250 marks.
Okay, 1250 marks the support level. Let's move on to another viewer query by Shweta. She is asking that she has bought Inox India at 1199 levels. What should be done from a 6 months outlook, whether she should exit or hold at this point of time? Inox India, Chandan, if we look at 6 months charts, after July onwards, there has been no positive movement in the stock counter. So what is the near-term hold? And in fact, she's seeing a loss at this point of time because she bought at 1199 levels. So what should she do? Should she exit or hold at this point?
I think one can hold. It seems that the stock has bottomed out with multiple support near 1080, 1070 marks. In fact, the same has been working well from last 4 months. So multiple supports are visible. With support of 1100, one can look for a bounce towards 1170 kind of levels.
Okay, 1170 kind of levels. Let's move on to another viewer query. Srivardhan Gupta is asking the views on Goldium International, and he has an existing position at 334 rupees. So he's seeing a bit of a profit because the stock has been trading at 410 levels. And even 6 months or even 1 month charts is quite positive for Goldium International. Do you expect the bullish trend to continue from here on?
So are you talking about Godrej?
No, Goldium International.
Okay. So I think one need to look for some sort of consolidation in the counter. However, the momentum is missing. As of now, one can look at the support near 400. With the support of 400, bounce may be there towards 425, 435. But one need to keep in mind that upside is being kept. So that's why just play for a bounce back move. The good part is technically it has been forming a cup and hand, forming a pole and flag pattern, and supports are intact near 400 and 402. So I think below, because of that, some recovery could be there. The good part is that stock has rallied by 140% in this year, and major trend is being intact. So a small follow-up would lead to the fresh leg of rally in the counter.
Okay, all right. Let's move on to another viewer query. That is, Hemant is asking the views on Bajaj Housing Finance. Bajaj Housing Finance, we did see a good listing, listed at 150 rupees per share, but right now the stock is trading about like 126. Quite a bit of fall that we saw, Chandan. So what are we expecting? What is the near-term hold for Bajaj Housing Finance?
So structure is weak. Stock is trading at its lifetime low level. So let it correct and find some recovery. As of now, till 129 is not surpassed, it can go down to 120 to 117 kind of levels.
Okay, 117 levels also is one of the targets that you're eyeing out for. Let's take another viewer query. Satya has been asking whether he should choose between Crompton or V-Guard. Crompton, if we look at 6 months charts, it is down about 7% at this point of time. And V-Guard, if you look at most of the 6 months charts, it is down about 3%. So what are you expecting from the both of these counters?
We are talking about Crompton. I think the stock is from the bottom at lower levels. As of now, the major support is at 384. So with support of 384, one can look for a recovery towards 410 in Crompton.
Okay, let's move to another next stock in focus, that is your Panacea Biotech. Well, the company has received a letter of award from UNICEF for supply of 115 million doses of its bivalent oral vaccine. Chandan, the stock has turned out to be quite a stupendous performer from the 6 months perspective. So what do you believe the near term holds? Some positive movement coming in?
So on reply on Panacea Bio, I think major trend is positive, and after the consolidating move of last 18 days, the stock is all set for the next leg of rally. The stock has really done a wonderful job in this year by rallying more than 170%. Even on the monthly basis, the stock has been making high tops, high bottom from last 7 months, and levels are gradually shifting higher. So 410 is major support for an upside target towards 525 in this counter.
Okay, 525 on this counter can be visible. Let's take another viewer query. That is your Kishore. He's asking the view on iron exchange at the current price. Iron exchange, Chandan, if you look at 6 months charts, it's up about 20%. However, if you look at YTD charts, it's trimmed a bit. It is showing a gain of about 16%. So what can we expect from iron exchange?
So are you talking about Inox Exchange?
Iron. ION.
Okay, IN, yes.
Yeah.
So I think some recovery could be there. As of now, we need to look at the follow-up actions. So one can hold the positions. As of now, the stock has been respecting to a key support zone along with moving averages. So one can hold to drive the recent up move in the counter.
Okay. Let's take another stock in focus, which is reacting sharply to its news. Well, Ramki Infrastructure, it's up about 3% at this point of time after the company received a letter of acceptance for project worth 215 crore rupees from Hyderabad Metropolitan Water Supply and Sewage Board. Well, the company did say that this contract is set to strengthen Ramki's portfolio in the water and wastewater management sector as well. If you look at this YTD performance, the stock has been an underperformer. Chandan, what does the near-term hold for Ramki Infrastructure?
So I think near-term recovery could be there in these counters. Only concern is that market failed to hold at higher zone. So because of that, selective infra name were falling down. But talking about Ramki Infra, I think structure is positive to range bound. However, the stock has not rallied well in this year, down by around 21%. But 2023 was fantastic, where it rallied by 251 to 820 marks. So as of now, the support is at 595, hurdle is at 670. So we have to play this broader range to get some swing in Ramkin Farm.
All right, just one last question before we let you go, Chandan. What are your trading picks at this point of time? We are going to start a new year 2025. So, what can be top buys from your end?
Yeah, so like we have to be very selective in this market scenario where very few stocks are doing well. I'll focus on one name, that is HPCL, Hindustan Petroleum. The stock has seen a positive price action, taken multiple support near 388, 390, and now has been making higher lows. So with support of 408, one can look for a target towards 432 kind of level. HPCL could be first trade where we can keep a close radar. Apart from that, I believe one need to look at certain capital market theme related counter. So here I like caffeine take. We are recommending from last couple of weeks and days. So with support of 1500, one can look for a target towards 1615 caffeine take.
Okay, all right. But with that, we have to let you go. Thank you so much, Chandan, for answering our viewer queries and joining us. Hope we connect with you soon as well.
Thank you.
All right. Let's take a quick check of the markets at this point of time, and then we'll move on to our second guest of this show. Sensex and Nifty doing well at this point of time. Sensex up about 300 points. Nifty also up about 87 points above that 23,800 mark. So yes, we have crossed 23,750 as well, and now we are marching to. We did hit about 23,800 right now. Sensex is also doing well above that 78,750 mark as well. So yes, we will be watching out whether or not it can hit 78,800 at this point of time. Let's look at some of the sectors which is doing well. That is your bank Nifty holding well. If you look at IT index, that is not doing well, flat in the green at this point of time. PSU banks also doing well, up about, Nifty PSU bank index up about 1% at this point of time. Nifty metal index not reacting well to today, flat in the green at this point of time. India Wix is also, it has risen, it has spiked up to about 1% at this point of time. If you look at the broader markets, small caps is flat in green, however, the mid caps also is flat in the red at this point of time. So yes, very quiet trade coming from sector perspective, but yes, both the benchmarks at this point of time is doing well. We'll see whether or not this momentum is sustained and whether it is built on during the intraday sessions as well. But moving on to our next fundamental guest of the show, we have Nirav Karkera from Fisdom. Nirav, good morning. So good to have you back.
Good morning, Lovisha. Always a pleasure.
Nirav, let me start off. How are you looking at markets at the current juncture? Because we've seen sharp sell-offs, we have seen the valuation also trim down a bit from its extraordinary high levels. So, what do you believe? Do you believe that the more fall is warranted for the markets going ahead?
So, the markets are at a very interesting juncture right now. The best way to describe it would be a cautious junction. So we are at crossroads. While the valuations have eased off from what it has been, around a couple of quarters back, there are still signs of growth that are to kick in. Right. So it is a phase of probably indecisive lull and a cautious stance. We believe that the markets are still vying for the next set of positive triggers. Of course, most negative things that could have happened, especially on the macro front, global as well as domestic, have largely panned out, and it has effectively baked into the prices as well. What has not been effectively priced in is the positive set of surprises that could be led from a variety of macros, ranging right from a revival in government capex to a recovery in the earnings after a rather dismal season of earnings, right? So their markets are on the lookout for positive indicators. However, having said that, there continues to be a very positive undercurrent in terms of buying strength. Of course, this is also led by domestic institutions, retail investors, but there is a very good reason to believe that such strength will also continue, even through the next coming quarter, even though a big surprise does not come our way, such strong buying undercurrent will continue to hold the markets at least in a resilient stance. So I would say at this point in time, the probability of an upside and upside surprises manifesting is far higher than downside surprises, being realized in the markets.
Okay. Nirav, most of the market experts, they're saying that the road for Nifty's journey to reclaim its record highs will take another 3 to 4 months, and it's going to be an arduous one. So do you believe and do you agree with this view?
So while I couldn't comment on the timeline, it could take slightly longer even. But one thing that I can concur to is that it's not going to be cakewalk, right? With the with the earnings season that just went by and the meek guidance that was given, there is little hope left for a better recovery. Of course, consumption has been spurring. Macros are looking pretty solid. We are expecting this entire festive and wedding season to spur a lot of consumption, a lot of transfer of money, the velocity of money to increase and indirectly give rise to higher consumption. Of course, there are these factors that are working in favor of a brighter outlook towards earnings. However, the guidance so far hasn't been very reassuring, so it could in all possibility take well beyond just one quarter, right? In fact, the probability of that seems higher at this point in time. So that's on one side. However, having said that, as we are inching towards the end of this calendar year and ceremonially entering 2025, we believe that next calendar year at least, Nifty will not just retest its previous record highs, but also go beyond it during the year itself. There is good reason, and it will be primarily led by a variety of factors. On one hand, you can expect a revival in government capex to be complemented very effectively by private capex. And finally, a lot of demand and these macros culminating into a better earning season, probably not in the immediate quarter, but in the quarter after that is when we could probably start seeing green shoots. So combination of these could make first half of the next fiscal a pretty interesting set of quarters to look at, and which will probably turn out to be one of the highlight moments of the next calendar year.
Okay. So do you believe, Nirav, that 27,000 could be achieved for Nifty next year?
I feel you hit it precisely on what we are indeed expecting. So 27,000 is indeed what we are expecting for 2025 in the ballparks of which, and this implies around 13 to 14% of an upside from here on. And in fact, I would go to the extent to say that we are expecting a lot of this upside to be contributed by the top constituents of the Nifty 50 packs. Top 8 to 10 constituents. So there could be some sort of heavy lifting done by the top 8 10 constituents of the Nifty 50 pack that will eventually help us achieve the 27,000 mark that we are expecting. So yes, Lavisha, indeed 27,000 is the expectation for 2025.
Okay, Nirav. And what about FIIs, Nirav? Because they are quite hesitant at this point of time. We're seeing the Trump's presidency, which is going to come about, next year, and then we have the stronger dollar, yields also on the horizon. So, how long is it going to take for the FIIs to make a comeback to the Indian markets?
See, there is a case for FIS to be waiting out currently. Like you said, of course, the Trump administration is yet to take full charge. There are expectations of a hyper growth economy. Of course, there are questions also looming around the inflation print that the Fed also pointed out in its recent meeting. Right, it is very uncharacteristic of the Fed to admit a fumble, but this time around it was also an exception. Right, so there are a lot many variables in play right now. I believe the FII stance right now is more of a wait and watch approach rather than a sell India approach. There is clearly no sell call on India itself. Right, it is just an allocation stance which has moved into pause mode and wait for developing situations, which is also slightly tilting in favor of the greenback and US treasuries also at the moment. And this is expected to continue as long as the power transition remains underway, especially in the US. Once that happens completely, once the transition is complete, once the White House is finally occupied with full effect and force, we can start seeing some trends in terms of clarity, in terms of what to expect from the US economy and from the other interrelated economies. this on one hand. On the other hand, there's the emerging markets pack, with China doing the way it is. Of course, there's been some sort of recovery, but yet India seems to be very strongly positioned in terms of what does its macros and opportunities offer. So within the EM pack, India is definitely shining. So I feel a series of events which could start with much more clarity on the West and the Western policies for growth will finally lead to decisions on finally participating in the emerging markets as well. And I'm expecting emerging markets as a weightage to only grow from here on. And within the pack, India is very strongly positioned. So any allocation to emerging markets should swing very quickly in favor of Indian equities, especially on the large cap and blue chip side of the listed universe. So we believe that once these things happen, and also, of course, the domestic earnings start kicking in, FI interest could come in sooner than we expected, and quicker in terms of versus what we would be anticipating right now. So if we were to peg a timeline, I believe it would coincide very strongly with the first half of the next fiscal itself. So this would also coincide with around that timeline. That's when we expect more FII interest to start picking very strong pace back into Indian equities.
Okay, all right. Let's talk about some sectors in focus. We have the IT sector. Q3 we were talking about. Q3 is going to be could be the next driver for the markets going ahead. So how is the IT sector placed? Because the Q3 is usually a seasonally weak quarter, but could it grab headlines in 2021, 2025?
So Q3 has typically been a seasonally weak quarter. However, around this time, the global macros have been very different and has been shaping up at different points in the timeline. So one thing that we are expecting is that this Q3 is not going to be like every other Q3. In fact, I say this more from an optimistic standpoint, right? So this time around, Q3 could be slightly better than the Q3s previously. The previous two quarters this year has anyways been a troublesome one. But with the dynamics in the West shifting, and with domestic IT companies trading at the valuations at which they are, and the growth opportunities that they are yet to tap into, and the order books that we've all been talking about are when it finally starts trickling into the PNL, we will see a good concoction that will paint a picture in support of domestic IT companies, especially the larger ones and the larger mid cap ones. So the Q3 outlook seems to be slightly more optimistic at this point in time. I'm not expecting a stellar quarter over quarter growth, but from a year over year basis, if you look at the corresponding Q3 over the previous year, this time's Q3 is going to look slightly better. In fact, there is far lesser downside versus what the upside surprise could hold at this point in time.
Okay. Nirav, you did mention about capex spending, which is going to, of course, pick up after we've seen a tepid first half of the fiscal year. So, how are defense placed at this point of time? Do we expect some outperformance coming in and some, attractiveness coming in the next year?
So there are three things going in favor of defense as a larger pack. But before I talk about those three things, one thing I would like to get out in the clear is, and speak about, at the outset, is that we must stop looking at defense as a pack in entirety. These are very distinct plays. The best way to look at defense companies is bottom up only. Looking at defense as an entire pack could be highly misleading, and this is a lesson that most of us have learned during the recent routes that we have seen over the past 2-3 quarters, right? So having said that, there are three things moving in favor, largely in favor of most defense companies. Number one, of course, public capex is set to pick up, and considering the state of geopolitics around the world, and considering how the domestic political backdrop has stabilized furthermore, with a whole lot more clarity in terms of the runway and the roadmap ahead, we could expect the government to commit a whole lot more capital to defense plays, right? So the budget is going to be swung in favor of defense. That is one thing clearly on the cards. Apart from that, the second thing moving in favor of defense companies and listed stocks very specifically is the corrections that happened, over the past couple of quarters that brought valuations to far more reasonable and palatable levels. Of course, the prices were running a tad bit ahead of the fundamentals, especially very, very aggressively factoring in, forward earnings. But now, with most of that rationalized, the pricing proposition or the valuation proposition of most of these stocks are, getting back to much more palatable levels. So that is one thing again going in favor. Third, we expect the private capex to also start picking up in the defense segment in response to growing demand side. Right. So with higher private capex commitment and higher ability to execute existing contracts, we expect the earnings to start trickling down into the P&L at least faster than what it did in the year behind, right, in the last year. So these are two, three things that are working clearly in favor of defense companies. However, it is at a very large level, and for most defense companies, what is worth looking at is very specific companies operating in the defense segment from a bottom up perspective across these three parameters, and ascertaining which are the ones who are positioned the best in terms of not just growth potential but also the valuation proposition.
Okay. Earlier there were some concerns about valuations with respect to defense names, but you're saying that it is slowly getting attractive at this point of time. But with that, we have to let you go, Nirav. But thank you so much for your time, and thank you for sharing your insights as well. We hope that we connect with you soon.
Thank you. Fun as always.
Okay. All right, let's take a quick check of the markets at this point of time. How the Sensex and Nifty has been doing. Well, it is down from its day's highs level, and Sensex is down, but it is above that 650 mark. However, it has slid down from its day's highs. It's up about 200 points. Nifty is also slid below the 23,800 odd levels. Just 1 point away from 23,800 levels. So 23,750 mark. 23,798 at this point of time for Nifty 50 coming in. If you look at the Bank Nifty index, that is up about 0.5%. So yes, what is doing well, that includes the likes of your banks, autos, then metals is also propped up, and oil and gas is doing well at this point of time. What is not holding well at this point of time, however, includes the like of IT stocks, realty stocks. They are not doing well. Even media stocks, we can see that they are also not holding well, and they are negative at this point of time. Broader indices, small caps, it's in the red. If you look at mid caps, also both of them in the red. So mid cap and small cap indices, both of them flat in the red at this point of time. So yes, we did start quite positively, but we have come off from its day's highs level. We'll see how the movement goes on during the intraday levels as well. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks are in focus. But until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.